Historically, Rolex watches have been synonymous with exclusivity, quality, and enduring value. Their meticulously crafted movements, iconic designs, and limited production numbers have ensured a consistent upward trajectory in value over the years. However, the tide seems to have turned, and the once reliable investment status of Rolex watches has hit a stumbling block. Today, the industry faces what some call the Great Rolex Recession. This downturn in demand and resale value for Rolex watches is causing ripples in the market, leaving experts and enthusiasts alike pondering the reasons behind this unexpected decline. But don't you worry, we'll share all we know on the topic and a little hope. So what exactly is the Rolex Recession? To put it simply, this is not your ordinary economic slowdown. This term refers to a recent phenomenon seen in the luxury watch market in which the demand for Rolex watches, as well as their resale value, have experienced an unanticipated decline. You heard that correctly. The future is uncertain for these recognizable Rolex watches. At this point, you could be scratching your head and wondering what on earth is happening. No answer applies to all situations, although multiple important aspects are involved in most cases. In a moment, we'll discuss this further. To begin, let's talk about the events that have occurred over the past year. Starting from late 2022, predictions emerged on Wall Street about potential turmoil in the US economy and stock market due to anticipated interest rate hikes by the Federal Reserve. Nevertheless, despite these worries, the economy as a whole managed to maintain a reasonable degree of stability. Instead, the aggressive monetary approach, which has been compared to a blitzkrieg, resulted in a different effect, which was a dramatic fall in the secondary market for luxury timepieces. Since reaching its highest point in March 2022, the Watch Chart's overall market index, which tracks the prices of 60 high-end timepieces and includes well-known brands such as Rolex, Patek Philippe, and Audemars Piguet, has witnessed a significant decline of 32%. A separate index, concentrating solely on Rolex models, likewise had a 27% decline as the overall index during the same period. This drop in watch prices can be traced to the United States Federal Reserve's aggressive actions to tighten monetary policy over the preceding 5 quarters. The subsequent increase in interest rates fueled fears of a downturn in economic activity, which caused investors to reduce their spending on luxuries and emphasize savings more. The decline in value of cryptocurrencies, which was also affected by the increases in interest rates, was an additional factor contributing to the falling demand for watches. Over the past few years, the most costly timepieces have experienced the most significant value drops. Over the past year, the cost of watches priced between $50,000 and $100,000 has increased by more than 15%, while the cost of watches priced between $10,000 and $20,000 has decreased by 10.4%. According to the data provided by Watch Charts, the price range of products that fell between $5,000 and $10,000 witnessed a fall of 6.8%. Compared to the stock market's performance, luxury timepieces have demonstrated significantly worse results since the Federal Reserve started increasing interest rates in March 2022. Many folks find that particularly alarming. During this time, there was a roughly 8% gain in the value of the S&P 500 index, which tracks the performance of major US stocks. Some luxury watch brands saw far larger decreases than their competitors. The Rolex Market Index, which monitors the 30 Rolex models with the highest value, experienced a decline of 12.5% over the past year, while the Patek Philippe Index experienced a decline of 18%. According to the data provided by Watch Charts, Audemars Piguet saw the most significant losses, amounting to approximately 20% less revenue than it did the previous year. During the everything rally phase of the epidemic, characterized by skyrocketing prices in stocks, commodities, and numerous assets, luxury watches were not exempt from the price increases. Luxurious timepieces rode the wave of this trend as excess assets were invested in non-traditional investments such as NFTs and meme stocks. The prices of Rolex, Patek Philippe, and Audemars Piguet watches all achieved all-time highs at the beginning of 2022. According to a report by Boston Consulting Group, pre-owned watch sales reached $22 billion in 2021, accounting for approximately one-third of the $75 billion luxury watch market. But hey, despite the falls that have been seen over the previous year, the prices of luxury timepieces have nevertheless shown considerable growth over a longer period, outperforming the stock market's performance. For example, during the course of the last 5 years, the Rolex index has increased by more than 55%. In fact, we'll tell you this, luxury timepieces have fared quite well over the long run compared to more conventional investment options. BCG reported earlier this year that despite broader market downturns during the pandemic, average prices in the secondary market for top models from the 3 largest luxury brands, Rolex, Patek Philippe and Audemars Piguet, rose at a rate of 20%, compared with the annual rate of 8% for the S&P 500 index. Anyway, several interwoven factors are usually at play when downturns like these happen. First, there is the ever-changing consumer preference. It is a historical fact that the preferences of those who buy luxury goods are always shifting. Instead of placing a larger value on material goods like watches, younger generations place a bigger value on their experiences and digital assets. As a result of this trend, there has been a decrease in demand for luxury timepieces, particularly Rolex. Some may argue that this is because they do not retain the same aspirational value they once had. Then again, smartwatches are also available at even more affordable rates. Another factor that can be at play is what we call pre-owned market dynamics. The secondary market for pre-owned Rolex watches has contributed to the economic downturn in its own way. Because there is now a greater availability of pre-owned timepieces, consumers purchase these more reasonably priced alternatives rather than brand new models. The prices of new and pre-owned Rolex watches have been driven even lower due to this tendency. And, of course, there is the looming economic uncertainty. Even wealthy customers are more prudent with their purchasing due to the global economic insecurity caused by factors such as the impact of COVID-19 epidemic. These swings in consumer mood have also affected the luxury industry, which includes high-end timepieces. This market has not been immune to these shifts. Then there is the speculative investment impact that many people constantly consider. You see, the idea that Rolex watches could be a rewarding investment led to speculative buying, which drove up the value of the watches. Now that the market is experiencing a slump, some investors may rush to sell their investments, contributing to the price decrease. The Rolex Recession is a reminder that even the most iconic and esteemed brands are not immune to market fluctuations. Like any other luxury brand, Rolex will need to adapt to the changing landscape to regain its luster. Collectors and enthusiasts might also need to shift their perspectives. Rather than viewing Rolex watches primarily as investment opportunities, they could appreciate them for their craftsmanship, history, and the joy of owning a timeless piece of artistry. The Rolex Recession is a crucial lesson for the luxury industry. That sustained success requires a delicate balance between tradition and innovation. As Rolex and the market adapt, they will uncover new avenues for growth and rekindle the flame of desirability that has burned for generations. Ultimately, the truth remains: trends come and go.